All right, so in this video, I'm going to demonstrate a system that can be used to take a $1,000 account to an $8,000 account in 3 trades. The first caveat of this system is I personally believe most people will blow their accounts most of the time and not be able to make this profitable. What this requires is an extreme amount of patience. It requires a reasonable amount of planning, and it also requires experience, in my opinion. It is insanely simple. I just think that it is objectively the case that most people are still going to somehow screw this up. So you should not expect to actually use this to make money trading because of how extremely high risk it is. I don't think you should do this. I think you shouldn't even watch this video or waste your time. But if you're curious about some of the examples in the risk structure, then this is it. So let's go ahead and let's pick a random number first. We'll pick a random currency pair. Number 7. So let's go 1, 2, 3, 4, 5, 6, 7. So that's GBP, JPY. So now we'll scroll back. Let's scroll back 1, 2, 3, 4, 5, 6, 7. Oh, you can't go back. So that's as far as you can go back. Cool. So we'll just start like right here. So this is 2017. Now, I do this on the 4-hour chart. I'm going to speak in first person throughout this video. I'm going to say this is what I do. You're free to do whatever the hell you want. I'm going to do everything the exact way I would do it personally. And I'm not going to say that you should do this or you should do that or you can do this and that. I'm just going to say it how I personally see it. So the first thing is the idea behind this is to start an account with a small balance. So for example, a $100 account or a $1,000 account. And then here's the crazy part. You risk 100% of the account per trade. So once you get a trade all figured out and planned out and set up, you risk the entire account on that trade. And you only take trades that you think are very likely to work out and very unlikely to not work out. And you try to get a 3-trade win streak. So you win the first trade, win the second, win the third. You've grown the account to 8x, risking compounded 100% of the account. So the basic way that I go about this is market structure. If price is moving in an uptrend and making higher highs and higher lows, I just sell the highs and then I buy the higher lows. That's it. That's literally, it's that simple. When price is in a downtrend, making lower lows and lower highs and the market structure is clear, I sell the lower highs and I buy the lower lows. And I structure everything with like a 1-to-1 risk reward ratio. So yeah, I mean, let's get into it. So we got to get a 3-trade winning streak, taking only trades that we think are very likely to work out. This looks kind of like a range to me, so I'm going to leave this. I found it works best for me personally on the 4-hour. The 4-hour and daily tend to be really decent. The 1 hour I found is kind of a pain in the ass. The 4-hour and daily seem to work good. That's why you have to be patient because some of these will take like a week, 2 weeks, 3 weeks to play out. Just going to let price do its thing. The idea is to take trades that you know pretty much you're probably going to win. If price can push up a little bit higher, I'll take a sell. There we go. So price did push up a little bit higher. That's where I said I'd take a sell. I like to give the stop a lot of room. That would mean the target would be down here. So a 1-to-1, risking the whole account on this trade. So all this was in market structure, in terms of market structure, higher high, higher low, higher high, barely, higher low, higher high. I just think it's going to pull back and make a higher low. That is it. Now, price also pulled back here and started to make a higher low. So we know that if the market structure is going to continue upwards, it's probably not going to break that low. So what we can do, and you're free to close early too if you think it's no longer going to work out. Let's say that we took a buy there after we got exited out of this position in profit, and then price popped up with that bullish candle on the 4-hour, and we'll say we took a trade there. Put the stop loss all the way down here and the target at a 1-to-1 because we think if it's going to continue structure, it's going to make a higher high. We'll be out before then. And we took a $1,000 account, brought it to $2,000. Now we're going to risk the whole $2,000 on the account. So this goes up and hits the target. And now to sell, keep in mind, price could still go up here, So this is what I mean whenever you have to be patient. You have to be patient and wait for the trades. Otherwise, like, yeah, you could sell here and it could make a double top and go down, but it's less likely to occur in the context of this like market structure going up and down and up and down and up and down. So we took the $2,000 account times 2. Now we got to 4,000. Now for the last trade, we will risk $4,000 on it. Risk 100% of the account. It relies on you getting a win streak, and so you can't like be impatient. You have to wait for stuff where nothing where you're like, that looks okay, I guess I can take it. You have to only take trades where you're like you can think to yourself, I'm almost sure this is going to bounce here or go up here or turn around here. Like you have to take trades where you're just being real with yourself and you're like, I'm pretty like almost sure that it's going to stop here and turn around. So I think this is likely to turn around from here. We have a new market structure, a low, lower high, lower low, lower high, lower low, lower high, lower low. I think it's going to push back up and try to make a lower high. Let me see what the next candle does. See what the next, there we go. So a little bit of rejection there. So I'm going to get long right here. Now the target's going to be somewhere up all the way up here. That means I can give this a lot of room with invalidation and put it all the way down here. And remember, you can always close early, whether it's in profit, loss, or break even. At any moment where you no longer feel like the outcome is going to occur, you just simply exit the trade. It does not matter what the profit or loss is. The whole idea is to get into trades that you're really sure are going to work out. If the market gives you evidence that makes it appear as though they are no longer going to work out, then you exit the trade. So this one goes up and hits the profit target. And the next trade would be something like this, right? Like a sell going down here. But this is where I would normally stop. So this is now $4,000 of a winner. And now you've got the account to $8,000, or now I, speaking in first person, got the account to $8,000. So we'll do a little thing here. We'll go account 1 equals, we'll do plus 7K. Since we started with 1K, we ended it at 8K, meaning we made 7,000 profit. Then the idea would be you start another account. And let's say this is our first trade, we're risking $1,000. And we set up our little 1-to-1 risk reward ratio. I'd make this a little bit wider. Target there at the previous low. Anticipating something like that to occur. So I think this is no longer to work out. So I would close this right here. So we would do 1,000 minus like, let's say 100. So we're down to like $900. Yeah, so now I think this is actually going to go up. So what I'm going to do here is buy, put a stop loss below all these lows, really nice and far, and a gratuitous target all the way up here at a 1-to-1. Probably get out of this trade here at break even. This, and see how long this took from April 5th to May 4th. This trade took a freaking month. So that's why it's best to do this with multiple accounts and let it all play out. This could still go up. I just think that it's unlikely. So we'll say we paid some swaps and commissions and shit like that. So let's say we lost another 100 on that in total. So we're at 800 now. So now I think this market structure is going to play out with that high, the lower high, and I think this might be a lower high. So what I'm going to do is I'm going to go ahead and short this here with a stop above these recent highs and then a target all the way down here. And in fact, what I'm going to do, I'm going to wait for it to pull up a little bit more. And if it can push up a little bit more, then I'll take a trade like this right here. So something like that. All right, so that didn't work. So now we'll take a, and in fact, the first trade would have worked out. That's hilarious. So now we'll take a buy down here, anticipating a move up with the stop loss further down. And we'll let this trade play out. So that one works out. So now we've grown the account to 1,600 because 800 times 2 equals 1,600. And now we're 1,600 on the next trades. Oh, by the way, this is a market structure trade too. A lower high. So let's say we entered like down here. Stop loss way up here. Target down here of a lower low if it can make a lower low. Keep in mind, it's normal for prices to bounce at previous lows. Just because it does that does not mean that it invalidates the entire trading idea. When you no longer believe the outcome is likely to occur, then you can exit. This looks like something I'm going to look to exit. So yeah, I'd exit that right there. Let's say this gave us like $200 of loss from commissions. Really, commissions won't be a big deal if you're using like an unregulated broker, but sometimes the swaps can add up. But this is still a relatively small account. So say it knocked out $200, we're at $1,400 now. What do I think is likely to happen now? I have no clue. I'm going to leave this alone. When the market doesn't do what you anticipated it would do, it's better to wait for a new setup. So this occurred. I think it's going to go up. Another thing to remember is you're going to be trading all of the currency pairs. So it's not like it's going to take like 3 months to grow an account doing this. Like you're going to have one trade. The moment you get out of a trade on one account, you find a new trade, you can enter it on that account. Then you're going to have probably 3, 4, 5 of the same accounts at the same time doing this. Your goal is to just get a little bit more of the accounts to the growth target than the amount of accounts you blow. If you start, say you start like 4 accounts, right? You blow 2 of them, you lost 2K, but the other 2 you get to the growth target. That's 14K profits. 14 minus 2, or sorry, 16K. Because you could, sorry, 7. That's $14,000 profits minus $2,000 loss. It's $12,000 profit. So you're still doing pretty good. So it's trying to push up to make the lower high, and we do push up and make the lower high. So I'm going to get on that. I'm going to get into this trade as well. And also I'm going to go, so 1,400 times 2. So we're at 2,800. Okay, cool. So let's see if this works. So it looks like we're struggling to go down. I'm going to see if we can pull back a little bit and look to exit this. Yeah, it looks like it's just a straight bull run. Yeah, I'm just gonna let this one play out. I think it's gonna stop out. So I'm going to opt to close that there at break even. How long would this have taken? Through August 31st, so pretty much September 1st to October 25th. So this is 2 months. So this is the thing about this is like you're going to be stuck in some of these trades for a while. However, it's not going to be your only one account doing this. You're going to start multiple small accounts with the goal of like just getting some of them to the targets and the other half of them are going to die in battle. This, say like swaps and commissions, say that ate up like $500 of profit over the time. And then say you just give up and you stop there. You still doubled the account. You took it from 1K to 2,300. So from that first account, let's just say we stopped here, right? Let's say you're like, okay, I've been doing this account long enough. I'm just going to scratch it here and I'm going to start a new account. So account 1 was plus 7K. And then account 2 was grown with a profit of plus 1 point, how much? 1.2K? 1.3K. So $1,300 profit. So now doing this, just with these 2 accounts, counting commissions, spread, swaps, all that shit, you still got one account to 7K at profits and then account 2 to $1,000 profits. So you essentially made like $8,000 of profit doing this. And this is only on one pair. This does not count all of the other dozens and dozens and dozens and dozens and potentially hundreds of trades you can take from multiple pairs, giving setups at different times. And this pair, let's see what the win rate is. So this is a winner, 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 break even, winner. And this is a break even, winner, and then break even. So actually there were no losers here. That's one thing I'm saying is you want to find like trades where you think it's very unlikely to go to the invalidation. But yeah, that actually wasn't any losers. So the win rate was extremely high. If you look at it in terms of wins versus break evens, there was 1, 2, 3, 4 break evens and 1, 2, 3, 4, 5 winners. So 5 winners, 4 break evens, and 0 hit the stop loss. You want the stop loss wide enough to where it's going to be very unlikely to be hit. That right there, I'm really surprised that didn't hit the stop loss. But even if that did hit the stop loss, it would have blown that second account, been down 1K. You pair it with the $7,000 of profits, you're still up $6,000, right? So this is just a little technical detail as to why that didn't work. You also have shit like this where you close early and it would have ended up working. So there's no way you can manage that. And that's pretty sad too, because that would have been a winner, followed by a second winner, followed by a third winner. And that would have been to the growth target when it would have made $7,000 profit on that, had this one simply not been closed at break even. So there's going to be shit like that happen all the time. The point is to continue trading through it. It's just to continue, just keep going. Just let the metrics and stats play out. Only taking trades that you think are really unlikely to hit the stop loss and very likely to move to your target. The reasoning can be whatever the hell you want. I use market structure because it's something just stupidly simple. That price just literally goes up and down and swings back and forth. And the idea is like, if it pulls back, just buy it. And if it pushes up, just sell it. Just thinking the next move will be either a mean reversion trade or a trend continuation trade. So you don't have to read too far into it. You don't have to do all this wild shit on the charts. It's just that simple. So this is the way that I approach this type of risk structure. And I want to share this with you guys to help out. So cheers.